Now, to talk about Section 3 in the stock market cheat sheet, I have to really be truthful with y'all about the fact that I'm wanting y'all to be here because I want to help at least 1,000 or more people in my next 10 years build a stock market business. That's what this is all about. Stock market business is something that's more than just making a trade. It's about having money management and having profit systems and being able to take advantage of market trends and having a long-term approach, because that's what businesses are. But the beautiful thing about a stock market business is it doesn't have a lifetime. All businesses have a birth, growth, and death. The stock market is going to continue through our entire lifetime. And so the business is handed downable. It's residual in the income ways eventually. And it's willable once you teach, because the business is really up here. Generations from now, your family will never think about money or worry about money the way you've probably had to, the way I grew up having to. It's just, I believe, what I'm here on earth to do, teach and provide, not just in the stock market, but just across the board, ways for people to alleviate the stress of money in their lives. Okay? So, that being said, Section 3 is about just little things that the public doesn't understand, that I know, that I've been taught, such as the stock market has a real ebb and flow to it. January, February earnings are really robust. Mid-February is usually a time for profit taking. Between end of February and March can be a lull in the market, where mid-March is usually a time for a good upward move. April, tax season, even though April, May earnings are a time to make money, tax season can have a downside pressure push on the market, which goes into May, where May becomes kind of a 50-50 month. It can go up or down, but generally by mid-May it kind of teeters off into June. And then you've got June sometimes can have big moves, but mainly is a little bit sideways. July, August, you've got sell pressure, and the major months in the market where you have major downside moves are August, September, and October. And then after that, once the market gets out of that, it doesn't always go to the downside dramatically, but it usually has a sell-off during that time. And then once the market gets out of that, you can find yourself at a good place to see a bull run from end of October through October, November earnings, into December, January, February earnings. Now, December can be a good or bad month. If it is, it's kind of like the Santa Claus effect, where retail stocks see a big uproar. People are just charging credit cards because everybody wants to be happy, joy at Christmas time. I love Christmas, and one of the biggest trades I ever did was after Christmas. 1228, 1226 was the entry point, or 1228 was the entry point, somewhere around there, and it shot up into January through mid-January, and it was a massively good trade market-wide. Why? Because another thing that happens when you look at the market as a place that has major moves regularly, it has an ebb and a flow that I just talked about, you can trade the indexes and do better than most people do with anything else. Now, I do trade stock, but I love me some index trades. Spiders, SPY, the RUT, $RUT, and the triple Qs. And really, if you've got the money, better than the triple Qs is the NASDAQ 100 NDX. You can make so much money with all those. So much money. Just trading the ebbs and flows and using not just a line chart, but real honest-to-goodness chart reading through candlestick charts to find entry points. Now, here's something a lot of people don't tell you about the stock market. You never want to be first and you never want to be last. You want to take the chunk out of the middle. That's what it's all about, the chunk out of the middle. I never am the first one into a trade. I want to verify that the trade's going to work. Then I get in, and I'm never the last out of the trade if I'm doing it right. If I am, then I know that I need to adjust. Because all I want to do is take a chunk out of the middle every time and take it to the bank. Stock market traders that do really well don't trade trends like most people do. They don't buy when everybody's greedy, and they don't sell when everybody's panicking. Stock market traders that do well buy into an existing trend after it has had its first sell-off. And then they go and profit from that. And then when the trend is over with, they'll watch it sell off, or they will generally speaking, they'll just watch it sell off. I do. Once the sell-off is proven to be a change in trend, I'll switch to trading puts for a while. And then once it has hit its support level, resistance for the put, I'll make sure that the support has been validated to buy in. In other words, it's hard for me to explain it without showing you, but I buy into existing trends and sell into the trend already going up so that the profit is in the middle. I never buy at the beginning and never look to sell at the end. It's a strategy that I like to call riding the waves that already exist. And you do that by knowing the ebb and flow of the stock market, knowing catalysts like earnings and stock splits exist, doing a lot of research, and having a handful of stocks. I've got 3 indexes, 4 sometimes, and about 10 stocks that I trade regularly, and that's all I do. Notice the difference. And people out there that are watching everything. And I have a basket here of stuff that I'm just sitting over, waiting for it to get up. Get up, let me kill you, right? And that's basically the way that I look at it is like it's like a covey of quail. Okay? You flush the covey, they get up. The one that gets up the best, you shoot that one. Sometimes you can get 2. And then you just wait for the covey to sit down, rest, relax, refeed itself. And you go back over, you flush it up, pow, pow. And you feed yourself through being a nurturing body for that covey of birds, understanding that covey is the stocks that you love, and you really ride them until there's nothing left there. But also understanding that you can't go there and eat but so much. So, the stock market is a forever regrowing itself so that you have a forever pocket of stocks there. But, eventually you're going to have to switch out 1 or 2. Indexes, they stay for a long time, but you can ride a stock 5-10 years. The movement of that tradable stock is over. You throw it out, find a new one. You always want to be looking at how to replace some of those birds in the covey, but you never want to replace them until you know that you've gotten everything out of them you can. And that is stock market education that you're not going to get anywhere else, because I only know one guy that knows how to look at the stock market like that, and he taught me. Okay? I look at the stock market different than most people, and that's what this cheat sheet is about. Changing your mindset. Don't care about everything else out there. Figure out stocks that move based upon what your money can handle. Put them together into your basket. Build your covey of quail and sit on those until one gets up. Got your target. And instead of trying to do every trade under the sun, if I can get that covey of birds to move once a month, and I can make 20 or 30% once a month off of that, I have a printing press for the rest of my natural born life. And I don't know about you, But I've never met anybody that has simplified the stock market like that for me. And that is why I love the stock market so much, because it is literally my business in a box, my printing press. And I'm not looking to get rich tomorrow, because 30% of $2,000 isn't going to change my life. But making 20 or 30% a month ongoing for the next 12 months, or if you can get a really, really good basket of stocks that move as much as 5 times some months, it will compound to a figure that will blow your mind. And that's section 3.